Good weekend. Ira Epstein of Linn Associates with your weekend financial market wrap-up, and this is for October 1st, 2021. Well, what an interesting week and what a crazy end to it, right? You know, the stock markets took off today in a huge way. These are sell-offs from the high of 200 points. So what was it? Well, it could be the deploying of new money at the beginning of a quarter, the beginning of a month. Makes sense to me. It could be that we're seeing failure to get through the Biden agenda, and without spending all that additional money, approximately $4.5 trillion, with nothing getting done there. That's interesting. It could be that without that, why is there going to be a tax increase? So as I look at that, that's another possibility that you've got going on. So when I put it all together, I'm not exactly sure what it was, other than today was one of those days where the market had reversal written all over it. By the day's end, you saw that President Biden went to Capitol Hill and walked away with nothing. In fact, we got something. We know there's no such thing now as a $3.5 trillion reconstruction plan. The man himself said $2 billion might be a number. And so Joe Manchin winning the day there. What the progressives will do? Well, because they're not getting what they want, they don't want to play ball. That's how you look at it, and that's how you sum it up. Energy prices still on a tear because the world needs it. Why this happened all of a sudden is the interesting part, but that's not what we'll discuss right now. Now remember, the difference on the weekend edition is we're going to look at a monthly chart, one, and then we're going to go everything else on weekly charts for the longer term trader. So when I'm looking at the monthly, you go back to August, what was that, of 2020? And you look at the rally that the market has had here all the way up to this peak. And that peak was made, just so we all are on the same page, August 31st close. It's not too far away. And we've had our first serious month correction, okay? We ended up with a 4.93% correction. And we're getting the beginning of a bounce because this is October and that was the end of September. Now, in the past, 5% corrections have been hard to come by. And it might just end up being that way for the month that's it. When we go to the weekly chart, we know that the market's been working on breaking down from up here, which was, what was that, the 45.34 level. Then the market lost 1.68%, made back a fraction, so you're still down 1.5%. Then you drop down another 0.5%, so we're down roughly 2%. Then 2.29. That's how you got to where you're at, okay? So they have to match, and they've pretty well done it. This, though, is the first time that we've had a settlement that is under the 18-week average since back here. Every time it's occurred in the past, 4 years, 3 years, the market manages to come back and rally. In addition, you got the Santa Claus potential. Doesn't mean it's going to happen, but things you have to watch. Going home, the market is under the 18-week moving average of closes. The bias of the market is down now. So when I look at the chart, you have an outside week down. If you take out the high of an outside week, the week after or the week after that, 2 weeks running, if that high is taken out for any reason whatsoever, I look for the market to make a run to the closest moving average over it or the upper Bollinger Band, whatever's closest. So here we are with the market. We have a pattern of lower highs and lower lows. The trend going home is down. The bias of the market is down, so we have a downtrend in play that's legit. Bias down, trend down. If you take that out, the target is 45.72, a new all-time high. So how would I be looking at that? That's just the way that I'd be looking at it, okay? That until it's taken out, you're bearish. I think the bears will try to defend their positions around 43.79. They'll look at this week's high of 44.72. If that gives ground, they'll say, well, in the past, that's what happened. That's the ultimate target the market has. Now, that number can change. It doesn't have to be hit this week, so it'll move around. The second thing I look at is momentum. Who's got control going home? You lost your bullish embedded reading. So this reading locked itself in, and I'm going to spend a little time on this week. all the way back here. So we have been on a weekly chart since the market embedded, and it takes 3 weeks in a row to embed, 2, 3, you're there. This was when the bull market began, April 1st, 2021, on this leg of it. And it did not end until just now. You'll see just as we get to it. That's at least how I'm measuring it. Doesn't mean I'm right, but that's how I measure it. Let's assume the market breaks from here. I've given you the what-if scenario if this week's high is taken out over the next 2 weeks. If the bears want to press the market, why not the lower band at the 41.8650 level? Next in the Nasdaq, same setup. You've got a market that closed under the 18-week average, lost your embedded reading. And I should say, when you lose an embedded reading, and this all happened, if we take a look, not here, and this was the week of the 24th, you've just lost it. The objective is the closest moving average. You've already hit it. So you've hit your downside target. Momentum down, bias down, trend down. If you take out in the next 2 weeks, this week's high of 15,399 and a quarter, I have an upside target of here. Now, could that change? It could, by getting up and over that number and then collapsing under it. But go back on your chart on a weekly. You just don't see that very often. If I see it, I will address it with you. When we get to the Dow, it's the same thing, but you've hit all your downside targets. So if you were to ask me which is the strongest of the markets, now I know it sounds crazy, but this because it's against its Bollinger Band. Can it break out of this and say, hey, we've got sideways action, we've made a top, and we're going to plunge? Yes. Some technicians will say this is a top in the market already, and if it can get under this and start pressing that lower Bollinger Band down, that's what it does. I'm of the school of thought that Bollinger Bands hold until they don't, and right now expect them to hold. And what do I mean by that? In order to make them not hold, you got to start pressing them and make them bend down. You generally don't do that. Tell me the last time you saw anything like that on this chart. Even back here, you didn't see that type of action. So I could make the chart longer, but there's no point in it. If we take out this week's high again in the next 2 weeks, I'm looking for the upper Bollinger Band, and I'll round out the party with saying in the Russell, it's the same. And again, you've got that defined sideways action here and in the Dow. These are the two markets that have the sideways action defined. Momentum is flat here, but there's something different on this chart. Even though you had an outside week down, you have a legacy of higher lows and higher highs. The trend is up. The bias is down since you're under the 18-week average. You get another kicker in this market. Is it an outside week? No. I think I said it was. It isn't. It's just a higher week that came down. So the power of the market, this isn't it. This is a sideways chart that didn't have the outside week. And because of that, it can grind higher or it can grind lower. But to get bearish, you've got to take out last week's low, not this week's low, and that number is 2146.90. So a lot of sideways action in the Dow and the Russell. Then we get to the 30-year bonds. Do you want to be short on the first challenge of the 200-day average in the lower Bollinger Band? If you do, it's a sucker play. I expected the market to bounce. I wouldn't be surprised to get back to the 18-week average of closes and fight a battle there. You are not in a trend at this point. Excuse me. When I go to the 10-year note, you've been in a downtrend. Now let me show it to you. Lower highs, lower lows, and on this week you finished out at 1313, down 11.5, and that was September 17th. And you were under the 18-week average. Unless you go up and take out this week's high, and what was that? Another outside week. Unless that's taken out, the target doesn't mean it has to be hit, but the target's the lower Bollinger Band, momentum pointing down, bias down. The market the next week drops away on you. This is the 24th. Goes for good measure again and gets back inside the Bollinger Band. So the trend is down. The market is oversold. Resistance is back up at 133.13. That's how I'm reading the chart. In the dollar index, while the daily chart is bullish, this chart is fighting to see what it does here. Is it overbought? Oh, you betcha. Take a look right now. Here's the market, and I want to come back here, right there, when you lose this reading. Notice how you've got both numbers. They're back underneath the 80 level. If I come back here, you see that you lost the reading there, but if I want to go further than that. You never got embedded. That's the point I'm trying to make here. You got into an overbought status here, backed off a little bit, back up to this. Now you've got really stiff resistance. If the dollar's going to be able to get through the 100-day average, you know the pros typically sell the first challenge of it. It can afford to back off a little, but if you get another move over it, well, you've got targets way up here. I know people won't believe that, but that's where the targets start fitting in. In the eurocurrency, which makes up 40% of the dollar index, it's the opposite. You've got the 200-day average, the 100 and lower Bollinger Band. Why would you be short any further? That does not mean you can't work through this and create a real bear market and get back under the 110 level. Traders will think I'm out of my mind. That's not what I'm predicting. This is where the shorts had to come out here. This is where the longs had to come out there until they see what's going on a weekly basis. Daily chart action's a little bit different, but if you filter your daily with your weekly, that's sort of what you're looking at. In the Canadian dollar, we have a pattern of lower highs and lower lows. You stalled a little bit, but that's still the pattern very much at work. I've been telling traders to get my full research package that the seasonals have been down in the Canadian, and so far that is exactly what's been holding. And notice, you have been under this market since June. This market has told you, forget the elections that were a farce that took place. Mr. Trudeau tried his best to get his coalition together. It didn't work. Lots of money lost in the election campaigns there. However, you still had all this warning that the market wasn't going anywhere. In the Japanese yen, the market has traveled now from the upper Bollinger Band to the lower in a 3-week period. I have no reason to think it's going to stay outside of the Bollinger Bands. I have every reason to think you'll probably bounce around in there right now and you're void of a trend. Bitcoin, I'm still in the bull camp. Why? Higher lows, higher highs. You hit a target, the upper band. You fell back to what area? What do we call the red line? That's the line in the sand. The bullish area or the bearish area, the demarcation zone. So when you fall back to it, it should be support and you picked your head up. What would turn this chart bearish is getting itself back under last week's low. That low is 40,085. As long as this holds, the market could be targeting the 53,739 level, the upper Bollinger Band. The market's momentum has turned back. It is in overbought territory. Weekly charts spend a lot of time overbought and oversold, so don't let that part just scare you off. That's just the nature of the beast when you deal with longer-term charts. In Brent versus WTI crude on a weekly basis, you've got the makings that maybe that $4 area is a bit too much and the market wants to correct from there. When you go to the Brent, you're up at the upper Bollinger Band, and unless I'm wrong, these are new highs for this whole move in the market. Now, we're going to see that OPEC meets this Monday. Now, they're scheduled in October for a 400,000 barrel increase. There's no reason for them not to go with that. The only question is, are they going to go for a bit more or not? That's how I view it. I gave a dissertation today on BNN TV, that's Bloomberg in Canada. And I was asked about this, we were talking, and I said, did anybody, or does no one have a memory that they keep going with? I'm older, I've got the memory. When Saudi Aramco came out, the Saudis were talking, they wanted $100 a barrel crude oil. Well, they got back to 80. Remember, we went negative not too far ago, long ago in the WTI crude. You know, it's so crazy how these prices all worked. Can they drive it there? Well, the longer-term charts are bullish. You're at an upside target. You are in overbought territory. I don't recommend buying over Bollinger Bands. EVER. Shh. Ever. Bad move. So I wouldn't be surprised if we get a little pullback, which tells me maybe we're going to see a little more oil on the market. It fits together. WTI crude, well, it's not going to be left, but isn't it a shame that our frackers can't take advantage of all this? I think it is. But we're green, and green means we're going to now do it in our countries, but it's fine for us to buy it from Africa, Not so green there. It's going to be fine for us to buy it out of the Middle East. Not so green there. They're going to produce all the oil. We'll use all the fossils they get. But that's because we're green and not producing it. Am I being facetious? You know I am. And it's a beginning. I understand we've got to get away from fossils, and that is why when you read the price of oil, understand what's going on. Understand this movement against oil. Understand the movement to electric cars. Understand the movement to natural gas. And that's driving the people that still produce it for higher prices. Isn't that how it's ended up? You don't have to agree with me. It's the end result. Why do you want to be involved in gasoline at this time of the year? To me, it's boring. I'd rather see you get involved in heating oil, but I'm covering those on the daily charts. Now, I want to remind you what I do for you during the week. You know, this is the weekly edition, so it's so nice to see what I do here. And imagine I go through 40 charts like this in futures and ETFs daily, and then bring you back on the weekly for the subscribers to the 40 like this, but 40 of the charts with specific buy here, sell there. You're only seeing some of the signals I put on a chart. I use 5 different indicators. So I am not going to flood you with, oh, let's get to an RSI. Oh, let's go to the Gann numbers. Let's go to Fibonacci. Oh, let's put a cycle on it. Do you know how dizzy you get with all that? If you don't think so, fine. I've got 50 years of doing charting. I have attended some of the best charting schools that I can ever imagine. I can't even name all the people because some of them have been barred from the industry. It doesn't mean that what they taught didn't make sense, from the cycle people to the others. I can go on and on. I knew people that were Gann experts. I've known the Robert Prechters. I know all these people. Here's the thing. It's too confusing. If it isn't easy and you can't figure it out, why are you investing your money in it? You have to understand it at the end of the day. And if you understand it, you get to see how it all works and what's covered with it. So I cover the ETFs after I do the futures. Why? Gee, let me think about that. So if I'm looking at ETF spiders, stock indices, aren't they based on the Dow and all the futures markets? Aren't GLD done, SLV, I can go on and on. Take advantage of it. Give yourself a try. So you blew $16.90. How much did you lose on this correction in a lot of your portfolio? See if it helps you. www.iraepstein.com under the word research. Have a great weekend.